My name is Eddie Toffby. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. We're going to start with LME 3-month copper. Okay, so if you're going to smash into and thus give a clear result as to whether the prior 2 days before yesterday were a traditional homing pigeon pattern, that is one that is a bullish reversal, rather than a more data-driven one or bearish one, a bearish homing pigeon pattern, then what the market did yesterday was the way to do it. Pretty good, large, key reversal up. Looking beyond that, I mentioned many times how this market is in fairly free territory here, bar some congestions between roughly $8,800 level and the $10,000 level. I'd also pointed out how it pays to watch the congestions nearby at 9160, 9305 and 9605, and more recently the very important GAN number at 9000. Well, yesterday the market dipped below the 9000 GAN number and dropped down to the very recent lesser 38.2% Fibonacci level at 88.87 before rejecting it and moving back up. A somewhat surprising rejection, as though I had this level marked on my daily chart here, I really didn't think it would stand up well to testing. Anyway, the market rose up through the 9160 congestion, halting at the next congestion, the one at 9305 overhead, closing just underneath it. So far today, a slightly lower open and a test down to the congestion below at 9160 before pulling up, back up a little bit. LME 3-month aluminium. A huge, really large, bullish long white Mariposa yesterday, way more than a bullish double. Initially the market opened a little higher, but then dipped down to test the congestion between 2080 and 2120, notably in the important 50% Fibonacci line of the big old 2011-2015 move at 2119, and that's at the top of the congestion, as well as the sharply rising short moving average currently at 2130. And also having a good, long, hard look at the old gap that's since been filled of the small 2100 to 2106 gap from October 2018, though not actually testing it in person. This seeming test lower, which we saw the results later on, up through the previously mentioned overhead resistance of the August 2018 high at 2178, and only stopping short of the important 61.8% Fibonacci line of the big 2018-2020 move at 2236. Well, this was actually just an ammunition gathering exercise. The Fibonacci was the reason why the market halted there and turned down last week, so that's why it's important, the halt there at 2236. So far today, another significant move, a slightly lower open but then a rally to push up through the 61.8% Fibonacci line, almost making a new recent high before coming back down again to unchanged. My only concern is the last 2 days action may be turning into a tweezer top, but right now it looks like an indecisive doji cross. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Toffby and ADM Investor Services International Limited. And here comes the final bit.